Ladies and gentlemen, good day and welcome to Eldeco Housing and Industries Limited Q4 and FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand conference over to Mr. Abhishek Bhatt from EY. Thank you, and over to you, Mr. Abhishek.
Thank you. Thank you everyone for joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with a business risk that could cause future results, performance, or argument to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchanges. Should you need any assistance to receive them, you can write to us and we'll be happy to send them over. Today on the call, we have the senior management of Eldeco Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Rajiv Khurana, Group Vice President, Accounts and Taxation. We will begin with the highlights of the quarter, followed by Q&A. Now I would like to hand over the call to Mr. Pankaj Bajaj for his opening remarks. Over to you, sir.
Thank you, Abhishek. Good afternoon, everyone, and thank you for joining us today. So FY26 has been a milestone year for EHIL, with record bookings and collections, a standout launch, and most importantly, a meaningful expansion of our growth pipeline that significantly enhances our medium-term visibility. During the quarter, we strengthened our growth pipeline by adding nearly rupees 2,000 crores of gross development value (GDV) through 3 prime land parcels in key growth corridors of Lucknow. 2 of these land parcels were secured via local authority auctions, enabling lower risk and faster monetization. Combined with the steady business at Eldeco Solano Gardens, this provides us with a strong and visible runway for sustained growth over the coming years. Importantly, this growth is supported by healthy demand and strong execution demonstrated in the year. Coming to our operational performance, in Q4 FY26, we recorded booking value of rupees 382.7 crores and area booked of 5.13 lakh square feet. For the entire FY26, the booking value stood at rupees 744 crores, up 120% year-on-year, with area booked of 10.77 lakh square feet, up over 100%. Collections remained robust. In Q4 FY26, collections were rupees 96.5 crores, and for FY26, the collections were rupees 352.1 crores, up nearly 39% year-on-year, reflecting steady improvement in cash flows. On execution, the construction spend was rupees 177.7 crores in FY26, up 14% year-on-year. We delivered 280 homes during the year, with delivered area of 2.78 lakh square feet. A key highlight for us was the launch of Eldeco Solano Gardens project, which saw an excellent response with 343 units sold out of 433 units launched, translating into bookings of over 384 crore rupees in the launch phase itself. FY26 total income stood at rupees 175.7 crores. EBITDA was rupees 41.5 crores and PAT profit after tax was rupees 24.3 crores. Going forward, our focus remains on 1. Scaling execution across ongoing projects, 2. Driving collections through timely milestones, construction milestones and handovers, and 3. Converting our expanded pipeline into launches. To conclude, we believe that the combination of growing demand, steady execution and a robust project pipeline positions EHIL well for the next phase of growth. I thank you all for your continued support. We will now open the floor for questions if there are any.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have first question from the line of Ashish Bansal from AB Family Office. Please go ahead.
Thank you. Thank you for giving me the opportunity. First of all, I wanted to talk about Solano Garden. So I think these plotted development usually carry a higher margin. So can you quantify what would be the margin profile as compared to the other projects?
You're right about plotted developments carrying higher margins. So the margins are very different across various asset classes. So group housing has a different margin. Horizontal development with villas is something else, and completely plotted is obviously the margins are the highest. Solano Garden is a combination of all the asset classes. Let me clarify. It's not only plotted. It has some villas. It has group housing plots, which means vertical development apartments, which we are going to launch later. And it also has a small commercial component where we are going to build some local shopping. In terms of margins, Rajivji, can you give an idea of average margins in plotted or horizontal developments?
So our margins are basically vary from 50 to 60%, if I say that.
For plotted development.
Yeah.
Yeah.
And in the range of, I think almost in the range of 50 to 60%.
But just to clarify, Ashish, the bookings which have happened are not only plotted. They have a combination. There are lower margin product there also, which is villas. Villas is also part of that 380 odd crore that we booked.
Sure. So on a consolidated basis, what would be the profile basis the current bookings, the margin profile?
Rajivji, do you have that number approximately?
If we talk about this year itself, we basically...
No, so he's talking about Solano Gardens specifically.
Solano, sir, it will be in the range of 50 to 60% only. It all depends on
including villas. No, not including villas. I think you should please take it at about 35 to 40%, including villas. 50 to 60% is a plotted component, but the weighted average will be 35-40.
Sure. That's helpful. And on a macro basis, so looking at the current pipeline, the mix, and can you help us understand what would be the likely margins for the year to come?
For the years to come. So for the years to come, a lot of our pipeline is...
27 and 28. Sorry.
Just the next year.
27 28. Yeah, 27 and 28.
So Ashish, it mostly depends on which projects are getting recognized for revenue in that particular year. And I believe that next year our main recognition will happen in Imperial 2 project, which is a high margin project. So I think we'll see a bump in our margins there. And EBITDA margin should be in the range of about 30-35%. Profit after tax should be about 25% next year. But that will be because of Imperial 2.
Okay. That's helpful. And regarding the launches, so how do we see the revenue visibility over, let's say, next 2-3 years? I mean, if you can just talk about the plans in a brief.
So 2-3 years is too early in terms of revenue recognition, because the life cycle of a real estate project is typically 4 to 6 years. And we tied up these massive projects in the context of our balance sheet in the last 5 to 6 months. They will enter we are in the process of designing them, then there will be the approval process, and sometime later this financial year they should get launched. But over the next 5-6 years, I think that given what we have already launched, and given the value of unsold inventory that we have, and the third category is projects which are yet to be launched, some breakup is there in the presentation. All of them put together should have a value of about 4,000 crore rupees. Now that will get recognized on completion as and when the projects get completed over the next 5 to 6, 7 years. Now difficult to say which year how much gets completed, but over the period this is the number we're looking at.
Got it.
And this is with land parcels that we already have.
Correct.
Yeah.
I think that's helpful. fine. I'll just get back into the queue. Thank you.
Thank you.
Thank you. The next question from the line of Guneet Singh from Counter Cyclic PMS. Please go ahead.
Hi, sir. Thank you for this opportunity. I would like to understand how much of revenues in Q4 came from Imperial Phase 2.
Rajesh, can you help with that?
Almost, if I say that Imperial Phase 2 is almost out of 60 crores, around 47, which is almost 70 to 80% is from the Imperial 2.
So, why have the margins in Q4 fallen? Because Imperial Phase 2 was a high margin project, because I guess the sunk costs were covered in Imperial Phase from construction itself. So, and what was the other expense which doubled in Q4 to about 20 CR?
Rajesh, please respond.
Yeah, just a second. Basically, in this year, we have some kind of a one-time expense. Like we have basically write-off GST input close to 11 crore, which is expense in this year itself. And there are some expenses of earlier project which came up in this year, which we have to basically bear that. So around 14 crore is one-time kind of expense in the other expenses, which is hitting our EBITDA and the PAT for this quarter and the financial year. So that is the reason for.
Got it. Got it. So how much of the total revenue of Imperial Phase 2, I mean, can the company realize, say, in FY27? And what should be the value of unsold inventory in Imperial Phase 2 currently?
Imperial Phase 2 next year will be on the basis of the delivery itself, but close to, you can say, around.
And 140 crore is the number I have.
Okay.
Yeah. For
127.
next year. Yeah.
Got it. So,
but you do understand, Guneet, that these are projections. Like one does not know when exactly it will happen. But according to our projections, about 130, 150 between that number, it should be the recognition of Imperial 2 next year.
Got it. So, I have another thing that I want to understand. So, we delivered 280 homes this year, but our revenues are about 140 CR. So, we recognize revenues on delivery of homes, or I mean, how does the revenue recognition work? Because
We basically follow the Ind AS 115, which clearly states the control has been passed with the customer. So once we are ready with our dispatch in terms of giving possession, then we recognize our revenue.
Got it. So 280 homes which were delivered this year, is it that, I mean, upon delivery of those 140 CR or the top line this year that was realized, which is about 165 CR?
Yeah.
Got it. My last question would be regarding any projects which have planned handovers in FY27 and FY28, if you can help us understand, and the GDV or the revenue potential of those projects.
So Imperial 2 continues, the possessions will continue in the, we've already shared the number with you for 26, 27. The next big project which will enter the pool of possession will be Latitude 27. So I think sometime later this year, hopefully, or maybe early next year, we will start that. The total value of that particular project is about 270-80 crore rupees.
All right. Got it. Thank you very much. I wish you all the best.
Thank you.
Thank you. Reminder to all the participants that you may press star 1 to ask a question. Reminder to all the participants that you may press star 1 to ask a question. We have next question from the line of Rohan Shah from RS Ventures. Thank you, and over to you.
Thanks for the opportunity, sir. The first phase of Solano Gardens saw strong response, approximately 384 to 350 crore bookings range. So how should we think about absorption for the remaining inventory and upcoming phases?
So, as far as the horizontal development goes, I think so the project, as I earlier explained, is a combination of horizontal and vertical development. Horizontal is plotted in villas, and vertical is group housing, which is basically multi-storied apartments. So in the whole planning, we had left 4 parcels for multi-storied apartments to be launched later, as we have done we followed the same format in Eldeco City earlier, where we did the plotted and villas first, and then it was followed by launches of group housing projects, which are continuing, like Latitude 27, Skywalk, etc. Even Twin Towers. These are all part of the Eldeco City project, the mother project. So in the mother project of Solano Gardens, about 75 to 80% of the horizontal development component, the villas and plots, has been absorbed and launched. We are letting, I think, in another couple of quarters or towards the end of the year, we will be launching the first of our multi-storied apartment projects there. And then, depending on the response, we will keep bringing more parcels to the market after that. It will be a multi-year project.
Got it, sir. That's helpful. So one more question. It's about actually average realization. Actually, it has sharply moved up, around 6,500 square feet range. Do you see further pricing headroom in Lucknow, or is growth now likely to be driven more by volumes?
So your per square foot realization also depends on your product mix. So it's what we're presenting here is nothing but a weighted average of our sale prices across projects and divided by the area across projects. So in the coming years, the new projects that we tied up are more city-centric, and hence the per square foot pricing will be little higher. And so this is good. There's going to be an upward movement in this, which does not mean that there will be higher margin, but it's just that they're not on the outskirts as much as some of the current projects are. So some of the launches like Trinity already is at about 8, 9, 10, 11. That's the range, which is higher than your weighted average. And the new projects which have been tied up are also in that range. So generally we will see that in the case of Eldeco housing particularly, per square foot pricing that we will be reporting will probably be higher in the coming years. But as a general comment, yes, prices are kind of stagnating across because they have risen quite a lot.
Got it, sir. That's helpful. So I have a couple of questions. I'll join back the queue. Thank you.
Yes.
Thank you. The next question from the line of Suhas Kullar, an individual investor. Please go ahead.
Hi. Can you hear me clearly?
Yes, Suhas, please go ahead.
Yeah. Congratulations first on the exceptional operating performance. My question was on Imperia Phase 2. I understand the total sale value of the project is around 300 crores, and we have recognized around 47 crores this quarter. I was assuming that most of the 300 crore will get recognized in next 2 or 3 quarters. But now you mentioned that during the year we are expecting around 140 crores of recognition. So just wanted to understand, is there something I'm missing, or is it that the deliveries will take more time?
You can't really predict when a customer will come over for possession. The project is substantially complete. We got completion certificate. I think that's the main thing. So the revenue recognition, whether it happens in real estate in 1 quarter or next quarter, majority of it is going to get recognized over the next 2-3 quarters. Rajeev, you can supplement my answer if you want to.
Yes, it basically depends on when the customer will move on for the possession. So that's how it linked with their interest to take the possession. And
one more thing I would like to say in the context of Imperia 2. Actually, I don't know if you realize we have completed and offered possession before time, which is a marvelous achievement for the Eldeco team, and my compliments to to our very hardworking members of the team. So what happens is, like, say somebody booked a house last year in January and he was told that, it's going to take 2 years. So he's planned his finances for the next 2 years. And now, because the company has got completion certificate and offered possession before time, it is not necessary that he will accept that possession. Are you with me? So he might still continue with his installments and then come in December, and so that's when it gets recognized.
Understood.
So even though we've completed, so even though we've completed, it's not that we will recognize all of it right now.
Understood.
I think it is like Rajiv ji said, that it is the accounting standard we are following is that when substantial control of the property gets passed over to the customer. If his installments are still running, then the control is still with us. So we are not able to recognize that revenue. But on the ground, the project is complete.
I agree. I think performance has been exceptional on all counts, be it on construction progress or on sales. I just not expecting that 50% of revenue will only get recognized during the year. Or maybe you are being a little conservative as well?
I don't know. I don't have the exact number. Rajiv ji can throw some light on it. Of the total revenue potential of how much is getting recognized in which year?
Okay. So more or less, I think Imperial 2 is almost a turnover of 300 crores. Out of it, he rightly said 46 we have done in this quarter. So almost 150 will be doing 140 to 150 in the next year itself. So close to 200, then 100 might be left for the next year. It might be conservative or it can be preponed also. It all depends.
Yeah, probably it might get recognized in the current year. So we are not able to. Obviously, our numbers that we are putting out are always on the conservative side. It could be earlier.
Absolutely.
Yeah.
Understood. Thank you so much.
Okay.
Thank you. The next question from the line of Shivam Gulati from JB Ventures. Please go ahead.
Hi. Thank you for the opportunity. So my first question is, what % of FY26 booking came from Solano versus legacy projects? So could you throw some light on that?
That number we already shared. Total bookings are about 750 crore and Solano bookings are about 300 odd something. So that number is there in the presentation, Shivam.
Okay. Noted, sir. So my second question is on Solano Gardens. So the strong response to the Solano Gardens seems to validate, your product market fit in Lucknow. So do you see this as a template for future large-scale developments?
That's what the idea is, that we build on. It's a great success for the company. We would like to build on that success. I think one of the slides in the presentation talks about our future forthcoming projects. So we are trying to replicate the Solano Gardens model. Solano Gardens is an extension of the Imperia model. It is a template which is already there. It started with Eldeco City, then there was Eldeco Regalia, then there was Imperia, Solano Gardens. So the template is getting extended and we're attempting to do it at 2 or 3 more locations. It's there. The details are there in the presentation.
Okay. Understood, sir. Thank you.
Yeah.
Thank you. We have next question from the line of Rooney Kapoor from Investera Investment. Please go ahead.
Yeah. Hi, sir. So, congratulations on the great set of pre-sales for the quarter. So, our question was, given the high base that we have this year, what are we planning for FY27?
Well, the high base is, I didn't realize it would become a problem. So we have projects in the pipeline, and yes, we would like to launch them, but we would like to also time the launches a little bit. But I don't think any major launches are coming up in this quarter or maybe even in the next quarter. There will be some chota-mota launches, but the big launches will come after approvals, as I mentioned in one of the earlier answers, towards the end of the year.
So given that,
But having said that, in an earlier answer, I did give a guidance over the next 5-6 years. I can't say for the current year, but for the next 5-6 years, our value of our unsold projects to be launched, projects that we've tied up, that whole GDV is about 4,000 crore rupees. And it would be reasonable to assume that we will be able to sell it over the next 5 to 7 years.
Okay, and secondly, you spoke about launching some projects in the second half of the year. So I want to know, like, what is the launch pipeline like around? How much square feet are you planning to launch?
They're in designing right now. So maybe in the next quarterly presentation, we'll give you more clarity there. We have not got the approvals. The designs are not final. The architects are working on it. So I would request you to hold on for 3 months for this.
Okay, and one more question is regarding, like, your earlier calls, you had mentioned that you're looking for parcels around Gorakhpur. So any update on that?
Yeah, we are working actively there, but and we had a couple of term sheets out, but they have not nothing substantial to report. In short, if there was, we would have declared it, but it's not something that is at a stage that we can say that we've tied it up. We're still in talks.
Okay, and then lastly, is there any business development, like any plans to add more land parcel during this year?
So we've done substantial business development in this quarter, and we would like to bring them closer to launches before we do some big business development this year. But there are, in our presentation, we've declared, I think, 3 or 4 locations, which we have mentioned under the category undisclosed locations. So land aggregation is continuing in those locations. So we would like to bring those land parcels to meaningful size. So that is organic land aggregation is continuing. But as of now, I think our hands are full for the next couple of quarters.
Okay, and this new parcel you have added in Shahid Path. So what would be the approx realization? Are you looking at that?
So I think I mentioned in my opening remarks, between the 2 land parcels auctioned by Lucknow Development Authority, they have mentioned in the presentation, and the Shahid Path, the total saleable area would be about 2 million square feet between the 3 projects put together, and total GDV would be about 2,000 crores.
Okay, thank you. That's it from my side.
Yeah.
Thank you. Reminder to all the participants that you may press star and 1 to ask a question. Reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Isha Shah from Family Office. Please go ahead.
Thank you for the opportunity. So you have added 2,000 crore GDV pipeline via 3 new land parcels. What is the expected launch timeline for these projects, and how much can be monetized in FY27 and FY28?
No, we will be answering this question in the next quarter because the projects are still under designing. But very vaguely, I think it will be towards the end of this financial year, the launches. It does take that kind of time to get the designs right and get the approvals and then get the RERA registration. So it will be towards the end of the year, if at all. But I hope that we launch it with, yeah.
And so given the ongoing geopolitical uncertainties globally, are you witnessing any impact on the buyer sentiment due to higher borrowing costs on macro concerns, or has demand remained largely insulated?
Nothing, no great impact in Lucknow. The demand there is very organic. It does not depend so much on the linkages with geopolitical factors are not that great. As far as if there are certain people who are connected to the stock markets, and if the stock markets are not doing well, so they tend to hold back on big decisions. So that could be there. The bigger impact that we think will come will be on the cost of construction side. That transmission is still not there fully. So I think that will be the bigger impact. We don't know. We don't have full clarity on that right now.
And so one last question, if you permit, please. So can you please provide a broad GDV estimate for the total pipeline, ongoing plus forthcoming plus the land bank, if possible?
I already answered it twice, 4,000 crores.
Okay, so thank you.
Yeah.
Thank you. The next question from the line of Manan Patel, an individual investor. Please go ahead.
Thank you for the opportunity, sir, and congratulations for great launch. Sir, first question is sort of bookkeeping. We have booked 64 crores revenue, but in your presentation it shows only 18,000 square feet delivered and 26 units. So it doesn't seem to fit in. So can you just throw some light on that?
Rajeevji, would you like to take that up? I don't know which slides are being referred to here.
Sir, can you ask again? We are also not.
So its total revenue booked is around 64 crores for this quarter. And
That's
if we
right.
go to operational yearly, quarterly and yearly operational highlight slide, I think slide 7, the delivered area is 18,530 square feet and
Right.
26 units delivered.
Right.
So the amount of per square feet revenue recognized seems to be very high. So just wanted to get your understanding, get your some clarity on that.
See, basically, you are talking about the deliveries, right? And we are talking some two different things. One is recognition and one is delivery. Delivery is a part of recognition also, but we recognize when the control has been passed on. When we give the position, even the deliveries are not being done, we have offered position and collection has been completely received. So then on that basis, we recognize revenue. So delivery is something which is related to your history part bit.
Understood. So you mean the possession or the revenue recognized area would be much higher than a delivered area?
Yeah. To that extent.
Okay.
Yes.
Okay. So second question is, again, you mentioned around 14 crore one-off this quarter. So do we expect any more one-offs in coming quarters or?
No. We have done more or less. We have done more or less the cleansing bit and took all the call as is in this quarter itself. We're not hoping any other concern in the next coming quarters.
Got it. Sir, a larger question on, I think UP launched the urban development policy in February, I think. So can you explain the impact of the same on our company? I understand policy aimed at approving projects faster and increasing FSI. So can you throw some highlights of that and impact of the same on our company?
No, it's a very progressive step. The impact on us will be positive. I don't know if people outside UP are realizing how things are changing so rapidly in UP over the last 5, 7 years or 10 years. The ease of doing business is really good. The policies are clear, they're predictable, they are investor friendly. So, and for a real estate development company, the demand is there. We could not address that demand in the earlier years because we had so many supply constraints. We had to run around for our approvals, and they were not predictable. The norms were not predictable. So the approval process become easier. It's become predictable. It's become more liberalized, and the project economics are, if not better, they're predictable. So that's a very great thing. There were so many questions on what can you say about this year and when will you launch? If you had asked me 10 years ago, when would you launch this project, I would have been not sure. But now I can say I would launch it in 3 quarters from now. Because we know that once you put your application for approvals, it does come around in some reasonable time. And the other thing, they will ease the FAR norms and other planning norms, which is also a great positive. So overall, it's a very positive impact on a company which is totally working only in UP.
Got it. And sir, do you expect competition also to increase because of this?
Maybe, I don't know. We don't. We are well entrenched in Lucknow. We are the oldest player in Lucknow. We are probably the most recognized player in Lucknow. So if national players come in, welcome. But we don't feel any adverse impact of that. If that does happen, I think it will be a positive for the Lucknow market and indirectly for us also.
Got it.
Mind you, I don't know, I would invite you to visit our website and see some real pictures. The product that we put out is as good as anything that any player does it in the country, if not better.
Absolutely. So that your track record also shows that. And sir, the last question, so on Eldeco Trinity, so the actual amount booked has decreased slightly. So we were supposed to launch a sample flat. So what is the status there?
So the sample flat is ready. There's some minor works going on in the lobby and some adjoining areas, etc., etc. We're going to relaunch the project in about 3 weeks' time. Hopefully, we'll get a good response because we made a phenomenal sample apartment. If you're visiting Lucknow, we invite you to please visit the sample apartment, give us your feedback. But fingers crossed, we should do well now.
Absolutely, sir. I would love to. If I'll get in touch with you if I come.
Thank you.
Thanks a lot, sir, and wish you all the best.
Thank you. Reminder to all the participants that you may press star to ask a question. The next question from the line of Guneet Singh from Counter Cyclic PMS. Please go ahead. Mr. Guneet Singh, your line is unmuted. Please ask your question.
Hello. Yeah, thank you for the follow-up. So I just want to understand more about Eldeco Latitude 27 handover and development. So in the previous remark, you mentioned that by year end we can expect this to start handovers in this. But in the presentation it says November 27. So can you please just...
Guneet, you've been following very closely all my answers. You should have also noticed that we offered possession for Imperial 2 before time.
Right.
Yeah, so there was a hint there that probably we will do Latitude before time. Our official position remains November 27, but hopefully, because of the way the site is working, we may do it much earlier than that. Even so early that it could be within this financial year, but we don't know. Our commitment to our customers is November 27.
Got it. So, is this project in phases or, are you saying that the entire project is ahead of time, or are you launching it are you doing the handover in phases? If you can help us understand.
There are 5 towers. I think 4 of them will get finished in the first phase itself. There is 1 tower which we launched later, so that's going to lag by about 6 to 9 months.
Got it. So, all right. Perfect. Then we'll keep on tracking this in the coming
don't hold me to it before time delivery. We may not do it, but we're trying.
Got it.
Yeah.
Perfect. Thank you very much.
Thank you. We have next question from the line of Sanya Malhotra from Malhotra. Please go ahead.
Hi, sir. Congratulations on good set of numbers. I just have 2 questions. First, could you please shed some light on whether a reversal in the interest rate cycle would impact demand? Like, can you give your view on the same?
No, we don't think it is going to impact demand. We did an internal analysis. Not a lot of customers of ours depend on home loan rates. Of our total collection, I think just about 30 to 40% is disbursed through home loans. Rest is self-funded. So, and even this 30 to 40%, I think the market is mature enough to realize that it's a floating rate and interest rates do go up and down. So if they are currently up, the customers do understand that, they could, over a 20-year period, which is what the typical home loan period is, it could come down very fast. So I don't think that really impacts the decision to that large an extent.
Okay, got it. And also, given that plotted developments and villas typically offer better margins compared to the group housing, are you consciously moving your project mix over in that direction? And if so, how are you thinking about the balance between these segments going forward?
No, we are not consciously moving to that direction. Yes, of course, the margins are much higher in plotted and villas, but also the pain is much higher. the pain happens in the land aggregation, in assembling the land which is large enough to have a meaningful number. That it does take a lot of time, and group housing projects like the ones I mentioned earlier, that the ones we won in the Lucknow Development Authority auction, your time to the market is very quick. From the moment you win the auction to the time you launch, it can be as quickly as 6 to 8 months. And then plotted and villa development, horizontal mini township kind of development, the land aggregation itself takes sometime more than 2 years. So one has to find a balance between these high margin. These are high margin projects, but they're long gestation projects. So one has to find a mix, and it's not one over the other. I think it has to be and both. They both have to work together for a good mix in your portfolio.
Got it. And so just one last question. You have consistently highlighted strong end user demand in Lucknow. So after a very strong Q4 driven by launches, how do you see demand shaping up in Q1 and Q2 of FY27? Like, are trends continuing at similar intensity?
So Sania, there's no problem with the demand. The problem, as I've always highlighted, is with the supply. Are we able to supply houses, good quality houses in the numbers that Lucknow is demanding? No. The answer is no. We are not able to. Whether Eldeco, whether our peers in the industry, whether it is the government sector, the demand is many times what the supply is. So not only are we doing business and we are running this commercially, there's also a social need for the kind of housing shortage there is. It's a growing city. Infrastructure is booming, population is booming, and people's incomes are going up, but the housing supply is just not keeping pace for many reasons. And what I hinted at one of the main reasons, which is land assembly is so difficult, land parcels are fragmented, they're disputed. So demand is, I don't think it's so, the demand supply gap is so skewed that we don't even worry about demand anymore. We just worry about supply. Can we put this through? Can we put through a nice project at a reasonable price, of course? There's no fun in putting through a overpriced project, because that does not really address the gap. So a reasonable price product, a reasonably designed product, can we put it through in large enough numbers? So there the runway for growth is very, very large.
Mm-hmm. Got it. Thank you so much, sir, for all the detailed responses, and all the best to you.
Thank you.
Thank you. Reminder to all the participants that you may press star and to ask a question. The next question from the line of Karan Gupta from Kavik Capital. Please go ahead.
Yes, thanks. Just one question. If you could just share the construction expense budget for FY27 and 28, that would be very helpful.
So the construction number spends are increasing organically. I think last year we did about 150, 160 crore. The previous year, this year we've done at 177 crores. I think in the current year we'll close at the current financial year. It will be about 15 to 20% higher. So about 200 crores maybe.
Okay. So what does your budget depend on the construction expense? Is there an opportunity to increase this so that you can speed it up? Or?
So there is a timeline to construction spends. If there's a project which is 4 years long, then it will be done in 4 years, right? So it does not depend on what your market condition is and what your whether you did the entire booking. Like in Solano Gardens, we did the entire bookings upfront. The plotted development and the villas, the majority of it got sold out within 10 days of launch. So in that quarter, we would see, oh my God, we did 400 crores of sales. But it's not that we can do 400 crores of construction in that quarter. Now the construction of this sale that we've done in, or these bookings that we've done in Solano Gardens will happen at an organic pace over the next 10 or 12, 13 quarters. So it increases gradually as you launch more projects. I'm saying that whatever we, in the current financial year ended 26, our numbers were about 15% higher than the number before. and in the current year, I think it will be about 15-20% even higher. So that's the rate of growth. It will keep increasing as we launch more projects.
Okay. And just finally, for the expense, is that also recognized along with the revenue, or do you recognize the expense as in when you're constructing something and then the revenue recognition happens later?
So non-direct costs are period costs, like salaries and overheads. They are period costs. They do not depend on the space of project execution or sales. Rajeev, please come in on this and explain this.
Rightly said. And see, all project costs, they are basically on the basis of the registration. But other than the period cost like advertisement, your salary and all other overheads, they are on the basis of the increments.
So to that extent, see, we did great sale in Solano Gardens, but all the costs of advertising and everything has been expensed. But the revenue will get recognized in the later years.
That's right.
Yeah.
So just so my understanding is correct, so the direct construction costs related to, for example, Imperial Phase 2 that you're going to recognize this year, a big chunk of it. So the direct construction costs related to that revenue will also be recognized along with the revenue. Is that right?
Absolutely.
Yeah.
Fair enough. Thank you so much.
Thank you. Reminder to all the participants that you may press star and one to ask a question. Reminder to all the participants that you may press star and one to ask a question. As there are no further questions from the participants, I now hand conference over to management for closing comments.
Thank you. I can see that people are really following the numbers that we put out with a fine-tooth comb, and that's great. And we hope that you continue with your support in the coming time also, and we hope that we continue to put out good numbers in the coming quarters. Thank you for your support.
On behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect lines. Thank you.
Thank you.